The trickiest questions that we have in SBR is when we have directors who want to do certain type of accounting, and we need to explain that they are applying a different standard incorrectly, and we need to explain the impact on the perception of the financial statements. And one of such questions is when bad debt allowance should not have been created. Consider this example. Imagine that we have a reporting year, let it be 2025, and a company has shipped some goods to the customer. And then next year, so like January 2026, the CFO realizes that at the time when the shipment was made, the manager knew that there was something wrong with the customer, that the customer was going through financial difficulty. So the question is, should they recognize bad debt allowance or not? And your natural urge would be to say, look, this is event after the reporting period. This relates to the asset liability that existed at the year end. It's going to be an adjusting event. But that is not what actually happened. Why? Well, because for you to recognize bad debt allowance, you need to have accounts receivable. In order for you to have accounts receivable, you need to recognize revenue in the first place. Credit revenue, debit, accounts receivable. But in order to recognize revenue, you need to make sure that there is a contract. It has to follow these step 1 principles. And we can recognize revenue and should recognize revenue only when consideration is expected. And at the point of shipment, one of your representatives, doesn't really matter that this is just a manager and not the CFO, knew that the customer would not be able to pay. So the consideration was not expected. This means that no revenue should have been recognized, no cost of sales should have been recognized. And instead, what should have happened, we should have taken the cost of that inventory and recorded as other expenses. And that is it. No accounts receivable, so no bad debt allowance. Fun, huh? Now, the key idea that you need to gather from this example is when you study a standard like revenue and you see the principles, you need to understand when these principles do work and when these principles do not work. And as for me, I have a fantastic course that does exactly like that. This is how you're going to be taught, and that is why my clients have fantastic pass rates, and you can join it using the link in the comments. And if you want to try study group for free, you can fill in the request down below. And next time when we're going to have it, you are going to be invited. So have a lovely day, as we are made easy with Lilia Kirilenko. Bye.